So thank you, everybody. Thank you. I'm very honored to moderate this session, which is, as she said, it's the highlight of this event with leading individuals in the industry. So, as you all have been presenting already, this session is about new design coming with blockchain technology in the traditional banking and capital markets. So I would like to just figure out how many of you from the audience are from the banking or financial industry. How many of you? Yeah, quite a lot, I guess, more than 50%. So, so I would like to start the discussion by talking about the traditional banking and capital markets. So, I mean, many of you, mostly you have been kind of having experience in the industry, financial industry. So, what do you think the challenges that the traditional banking industry and capital markets are facing today, and how do you think the blockchain technology can help tackle these challenges?
So yeah, that's a wonderful question. I would say probably the primary issue is still education. And while we may have blockchain technology to solve a lot of these problems that we're seeing as far as inefficiencies in say global remittance and just bank-to-bank transfers, it still comes down to educating the banks, the regulators, all these people in this area to be able to understand what the technology can actually do for them.
You were talking about the traditional market, I understand that, right? Traditional market, I think the challenges for traditional banks is basically revenues. Costs are still more or less going up. More AML, more compliance costs. On the other side, not really new markets or products that can be sold. And also the whole settlement process is very cumbersome if that's in currencies or securities. And I think this is all dragging on the system. As Julie said before, there's studies out that probably 30% of the banks will not be around in a few years. And I think that is basically with not necessarily Sygnum and Seba, but I think in general there's challenger banks out on the traditional business that take some nice share out of traditional banks. I mean, at the beginning they didn't feel it, and now if you look at Revolut and 26, all these people have astonishing growth rates. Probably still don't make a lot of money, but are very true competitors. And then you have the digital space, right? And I think this is, especially the digital space, is basically something we were lucky enough. We could basically build on a green lawn. We don't have any legacy systems, so basically we are focused on the digital space, where traditional banks basically have to turn around their whole infrastructure. And having worked for a big bank in Switzerland, the IT department is a very big animal and very hard to turn, and everybody has requests from IT, and if digitalization has to come on top of it, that's going to be a big ticket. So I think many banks will struggle with that.
I mean, as SIX, we talk to the whole market in Switzerland basically, because they're our customers, and what we are seeing is what Urs said. Lower revenues, lower margins, and increased costs, reporting costs, compliance costs, etc., etc. And for me, the blockchain is a technology which can tackle this problem for two ways. One way is automation, so through smart contracts to automate processes to bring the cost down. On the other hand, to increase the product range. I mean, we have here crypto assets as an additional asset class. We have here today about security tokens. We have here about non-bankable assets becoming bankable. So this increases the revenues level. I think it's very important for a financial market hub to be at the forefront of those technologies, because it's going to be a game changer. And probably similar to the internet. If you looked at which banks had e-bankings 10 years ago or 15 years ago, there were very few, but the ones with good e-bankings, either for business-to-business customers or for private customers, basically managed to grow, and those which don't offer e-bankings are probably disappeared. And for me, that's going to go a similar path. So blockchain is a technology to solve a problem. However, unlike e-banking, I think most of the people won't realize it, because blockchain is a technology which the end customer probably doesn't see if the bank is using it. It just sees the asset on top of it, and probably the reduction in costs, which is allowed.
Great. Given that I've probably the most limited banking experience of the panelists, I'd like to say that the first time I worked for a bank was the day that we received our banking license. So my perspective, and I like to, I guess, share, is really from the perspective of the clients and also the capital market side. I come almost 15 years of experience on private equity and venture capital as a capital allocator for institutions. And for me, the big question mark and the reason why I gravitated to this space was that when you look at the best performing asset classes over the last, doesn't matter what time frame you slice and dice it, 1, 3, 5, 10, 15, 20, 25, 30 years, private investments, so private equity and venture capital, private real estate, private debt, have outperformed all other asset classes. But how many of us in this room as individuals have access and exposure to that important asset class? Why are we being denied the ability to participate in, and why is it the province of the large, ultra wealthy and the institutions? A lot of that boils down to structural issues. A lot of that boils down to asymmetries of information. At my last role before co-founding Sygnum, I was with the family office for one of the largest families in Asia, 6th largest actually. And there, just to give you a sense of how acute the issue is, when we invested in one of the large investment banks in their self-managed private equity product, the return at the fund level versus the return that we got. So the return at the fund level was 16%, 16%, on the underlying investments, but by the time it hit our account, it was 8%. And that delta in between, that's the fact. That's all the fee leakage that goes to your brokers, your placement agents, your relationship managers, your bankers, your corp secretaries, all that stuff. That's the friction that makes the threshold for participating in private investments much higher than what is reasonably expected of a individual, especially a retail investor. I do see a lot of promise in the digitization of traditional securities, especially illiquid the securities of illiquid private companies. I do think that what we're doing, all of us, in some small way, will help to democratize access to these values for the man in the street. And I do think that the banks will have to respond accordingly. They will have to, I hope, look into more cost-efficient ways to provide this important range of services to both the issuers of such tokenized securities, tokenized assets, as well as the investors. And they're working with the next generation of exchanges like SDX, also working with in collaboration with and securitizing assets together with digital asset banks like Seba and ourselves. I think we have a chance to at least remedy a really bad situation.
Yeah, thank you everybody for your opinion. So I think we are all in the opinion that blockchain technology can bring efficiency and transparency and security to the existing financial industry. But when it comes to public blockchain, which is supposed to give this security, there is always a little bit of problem of scalability, and which is very important for financial services. So Matthew, I just have a question for you, because your DAG protocol is having the goal to provide the high level of security of a blockchain, public blockchain, but at the same time scalability almost as a private blockchain. So how do you achieve this goal with your protocol? Can you explain a little bit more?
Math.
Math. Yeah, it works.
Yeah. So I mean, in short, the answer is math, but it's more than just that. So the primary thing that we were able to do was, instead of normally whenever you're disseminating data and you're trying to send a message across these blockchain systems, you're using a primitive called gossip. So instead of using gossip, what we were able to do is use a broadcast-based primitive, so using authenticated peer-to-peer channels between two nodes. And what you can do is there's some very, very nice classical things that have been going on since the 80s, that either reliable broadcast or some other mechanism where you can guarantee that the number of steps that it takes to disseminate this data is like optimally 3. And so then that's what we're able to prove, is that applying this to our DAG protocol, we can actually guarantee that we have just 3 steps to be able to have a message be delivered by to all the participants. And then the other thing is that we have because we are using a DAG as opposed to a blockchain, what we're looking at is that initially we have a looser structure that we're sort of operating on. And because we have a looser structure, we're not actually imposing order immediately. So by not imposing order, what we're able to do is actually go ahead and have a higher throughput and higher capacity. And so what ends up happening in this case is that normally in normal blockchain systems, you're submitting your transaction, all these transactions get aggregated into a singular block, and then that gets approved, in some way, either by your random leader election in the Nakamoto protocol, where they just select some items from the memory pool, or by sending the data directly, and then it's going to be approved by some 2/3 committee. And so instead of doing that, we allow for this additional concurrency to occur across each of these vertices on the DAG. And then what ends up happening by a sort of essentially a natural emergence. It's just a consequence of the protocol that we naturally end up ordering all the transactions. And so then this allows us to not necessarily have that imposed structure immediately, but to take a step back and allow that structure to naturally emerge. Yeah, I just wanted to say that we do have about 27,000 transactions per second, and we have 1.7 second latency. This is using 128 nodes across 8 different regions on 5 continents using AWS. So the goal is to still go ahead and push this further, and we're currently still in our private testnet phase and going from there.
So you're doing it on your native blockchain, yeah.
Yeah, so this is on our native platform, so then the idea is that we're doing our fundraising round, our private token sales. So if there's interest and you want to help support our project and see what we're able to actually build, feel free to come and talk to me afterwards, and I'd be happy to let you know more information about what we're doing.
Yeah, thank you. That's very interesting. I mean, I hope. I want to see how your protocol is applied with financial industries. So, actually here we have Seba and Sygnum. As you know, it's the first 2 Swiss banks that obtained the banking license. And just recently, Fidelity, which is also one of the biggest financial service company in the world, has announced that they are now ready to provide a full custody service, crypto custody service. And there is UBS who also announced that they're interested in tokenizing asset classes. So I'm just wondering, as crypto banks, how do you position yourselves in the market, and how do you differentiate from these kind of giant players existing already in the market?
I think if Sygnum and Seba will be the only people talking about storage of digital assets, creation of digital assets, and we'll be the only dreamers in the whole world, I think we would have a very hard time to basically find customers and also talk to customers. I think the bigger the infrastructure gets, the more believable it gets, especially when basically AAA players like Fidelity come in and offer custody storage. So first of all, there must be a need for it. Second of all, there must be a belief in it. And so basically they are basically singing our tunes. Right? So UBS, we can debate. I think that's nice thinking. I think they're far away from whatever they say they want to do, but Fidelity clearly is open, and we have the back. It's the ICE exchange. They have now contracts or futures on deliverable bitcoins. We have the CME for quite a while, having dollar settlements for bitcoin contracts. So I'm not saying the merrier the better, but we cannot be the only two people talking about the same thing. How are we going to position ourselves? I think we have, Seba anyway, I think we have or Sygnum as well, we have kind of a, I would say, boutique approach, because we're not open for retail investors. So I think that differentiates us definitely from UBS. Fidelity has a very institutional approach, that's their base customers. So we are open for both, and I think we are probably more creative than just offering custody for bitcoins. When we talk about tokenization, we talk about new assets, Fidelity talks about storing bitcoins at the moment, and which is, I think it's great. Again, the merrier the better, but I believe we are starting on a green lawn, both of the banks, and we are built for digital assets, so I think we're going to be much more agile, especially in the first few years, than any big bank or any big player coming in.
Thank you, and I completely agree with what Chris says. I think it's an absolutely wrong time to be thinking about the slice of the pie. Rather, we should all be focusing on growing the pie itself, and that's really much our approach. Working with partners really in the industry like Seba and others in the audience and across the world. For Sygnum, it's always been our approach that we want to empower traditional financial institutions, including other banks, to be able to provide these services for digital assets to their end clients. Ultimately, we all win when these products and services find a home and a use case with the global community, especially on the investment side. To that end, we have been engaging with, I would say, last count probably in excess of 130 banks that are interested in partnering, in learning, in also then seeing if this can be a contribution to their top line and hopefully bottom line as well. And it's not just, I think, the players in Switzerland and the West. I think I just saw a snippet from the Seoul conference in Singapore a couple of days back. Piyush Gupta, CEO of DBS, which is the largest bank in Southeast Asia, he also announced that they were looking at both custody, but also importantly, maybe for Evo here, to look out for a digital asset or crypto exchange as well. So when the big players, this year DBS swept up all 3 World's Best Bank Awards. When a bank of that stature is seeking to reinvent itself by offering and extending digital asset services to their clients, I think all of us should pay attention and all of us should be supportive, right? And how Seba and Sygnum, as I was mentioning, will be able to play a role. I think we are the speedboats, right? And these large bunkers, tankers, they can work with us. We can lead the way. I think we are pushing innovation within the context of a regulated banking framework. We're pushing it all the time. We're speaking and engaging with regulators all the time. I think we have a role to play to help these banks also understand what is possible and what's not, and hopefully co-develop with them solutions that ultimately the end customers want. I think that's always I would be the first to raise my hand and say we are guilty of that as well. We get so obsessed with the technology, with how cool it is that we sometimes overlook that we need to bring this to the client, and the customer satisfaction and customer centricity at the end of the day is the ultimate prize and should be our ultimate focus.
Yeah, I think we all agree that it's a good sign to have these existing companies in the field coming into the market, because it also shows that we are going towards the mainstream, not anymore, kind of minority. So my next question will be about STOs. In Korea, especially, like, STO has been the central topic in the crypto world. It has been for a while, but we haven't seen any major.
So we haven't seen it. So we haven't seen any major projects, STO projects. So
I just want to hear your opinion. You're from Switzerland, which is the leading kind of country market with cryptocurrency, crypto assets. So how do you see the future of STOs? Do you think it's gonna boom at some point? Just yeah.
So generally speaking, yes. I think that what we're looking at is a mass movement towards this either securitization or digitization of pretty much a lot of assets. So either then in real estate or in maybe gold or other precious metals, or even taking a fund and being able to go ahead and digitizing that and then issuing that directly on a blockchain. So I think this is where a lot of this is going. It's going to be fully regulated, obviously, but that's okay. There's clarity and guidance in having that kind of regulation made available in the space, as opposed to this Wild West that we've sort of encountered for the last few years.
I think we come from the ICO market, or the ICO itself, which was basically kind of unregulated crowdfunding, and now that was then the bad word, and now it's STO, and maybe I'm not educated enough, but there's a lot of STOs that have nothing to do or hardly anything to do with securities. They just changed the name, and I do believe, I'm not saying it has to be a bank behind it to be a proper security, but there has to be certain qualifications to qualify as a security. In every country it's different. But I do not believe that as we sometimes say, two guys and a pizza have a business and then they can't do ICO anymore. Now they call it STO and it's really a security. So to cut it short, I believe, yes, STO is the future. Is it the future for new businesses, or do we talk about an STO as a token that represents any kind of security? I think 100% that. If it's the right fundraising, I would to a certain degree doubt it, because to bring a security to the market, there's a lot of work involved, a lot of costs involved. So if it's an STO of a few million, and also then you should have an exchange or some kind of exchange to be able to buy and sell these securities. So I think we still kind of very much in the gray zone. And I think the gray zone will, or the fog will lift. But I think STO, I'm not saying it's going to get a bad reputation too, but currently it's a bit on the way to have a bad reputation. So maybe we have to change the name again as a securitized token or something like this. Then it's more clear what it is.
You know, when I started my career, it was just the end of having bonds on papers, where you had to cut out the coupons and bring them to the bank clerk, and then you would get the coupon. So then there was this great first step of digitalization. We called it electronic trading in Switzerland, where we dematerialized the paper-based thing and had an electronic security. So for me, the technology is just the next step. It makes the security a bit more intelligent, because you can link a smart contract, you can hash it. I mean, intelligent in brackets, but it gives you a higher way or a better way of automating things. So from a technological perspective, it's just the next evolutionary step. I don't think it's very revolutionary, it's evolutionary. In terms of what products, for what will be supported, I think that's more a regulatory question. And I think the adoption will come in where the guidelines are clear. Maybe we, as an industry, don't always agree with the regulations, and we probably think very often it's over-regulated. But the investor protection from an investor perspective is obviously needed. And in Switzerland we have the law in a way where it's technology agnostic, and when we try to focus on how to protect investors. It's not always done the best way, I admit that, but it's definitely a necessary way, as we have seen that otherwise things can be misused. But again, if you look at history of equities, that's not a blockchain topic. That's just probably a human topic, how to try to take advantage of others. And technology is another mean to that.
Great, yeah. Thanks for taking it in a philosophical direction, Ivo. I think ultimately I have to agree with what Ivo said as well. I think, for us, the real invention was, these non-counterpartyless tokens, protocol tokens, right? Tokens which doesn't give you a claim against any entity. I mean, that Bitcoin et al. And those are truly things that the world has never seen before. Security token, asset-backed tokens, those are just evolutionary and I think very obvious, predictable next step in where the development of the market is going. I think ultimately, just coming back to again a first principles-based approach on evaluating these things, what problem are we trying to solve, and are these tokenized assets the way to solve them? And the problem we're trying to solve, I think fundamentally is the two-sided market problem, right? You have issuers who want to raise capital in the quickest, cheapest way possible. It gives them the highest valuations. You have investors who want exposure to interesting underlying, interesting investments that align with their thesis of the future, and also hopefully their values. And then in between you have the mechanism by which you achieve that. And token issuance is just one in a string of technology innovations that have been brought to market. That being said, I do think obviously I spent some time earlier in this panel talking about the lack of efficiency and the information asymmetry that exists for the private investment asset classes. I think those will be disrupted by security tokens. I do think that there's a role there for all market participants to play and get involved.
Thanks, everybody. Since we are running out of time, I'll just address the last question about quantum computing. So, quantum computing has been caused. Some say that has been the cause of decrease of Bitcoin price, like 5 months ago. And I mean, some say that in 10 years, quantum computing can break the Bitcoin blockchain. And I just want to ask Matthew here, I mean, if that's true, and if are we, do we have to worry about it? I mean, is it gonna break all the things that we have been discussing until now? So please tell us your opinion.
Right, so, I mean, this is, with respect to the Bitcoin and the current cryptographic signature scheme that we use, it would, yeah, I mean, so this will actually break Bitcoin. Now, what it will not do is necessarily break all cryptographic digital signature algorithms. So generally what this comes down to is having a trade-off. With a lot of these options that we have in the post-quantum world that the NIST has been fielding as far as potential solutions for cryptographic schemes that can handle the quantum supremacy, the idea is that you almost always end up with a larger key signature and then also a larger key, right? So you have, and then also your verification time. So normally speaking, what we're looking at now with the current Bitcoin blockchain and the digital signature that we have, it's very fast. It has a short key size, and it has a short message, a short digital signature length. So the issue is that with these post-quantum protocols, what's going to end up happening is we'll have a larger blockchain bloat, we'll have a slower verification time, and we'll have a, locally everybody will have a larger key size. So this is not necessarily optimal, but that's sort of the price of security.
Okay, so there's something to worry about, but we can solve it. That's a good answer. So thank you very much, everybody, and thank you for listening.
네, 감사합니다. 저희가 약간 지금 방금 지금 텐스페이스에서 제가 슬롯이 멈춰주셔가지고 지금 이제 바로 15분 동안 프레젠테이션을 해주시는데 텐스페이스는 제가 이제 사전 미팅을 했었는데요. 아주 특허를 가지고 있고 미국에서 사업체에도 들어오고